pretty good. Just to give you an idea, and this is where most people actually fail, where reality basically clashes in their face with a concrete brick or something like that. If you sign up for a prop firm or for a hedge fund as a floor trader, they will not even take your phone call if your Sharpe ratio is lower than 2.5.
What is your Sharpe ratio? Oh, okay, so it's actually your return of an asset compensates the investor for the risk taken.
Yeah,
okay.
Against the risk minus break even. But don't take that as a disencouragement. 0.4 is pretty good for a day trader. Because day traders have on average much larger exposures.
Okay, well I'm going to be confused about these numbers then.
But still, if you would sign up for a fund or something like that as a floor trader or for a bank or whatever, below 2.5 they would not even give you an interview appointment.
It's because they're pussies.
No, because they like money and they want to keep it.
Yeah, with their fucking vaginas.
Just hear Swing sighing in disappointment.
No, they have that vagina so they can store more money. It's like another wallet.
Dollar CAD.
Right.
That's how it works. That explains so much.
They're evolving even multiple pussies. You don't even know.
So the purse is not never ending, it's something else.
Asylum, do you have a Forex Factory or MIF Spook link of stats?
Yeah, let's tear it apart. Come on.
I just made him one. If he dares to share it, then it's his thing.
Oh, yeah.
Dollar CAD.
It's okay, we called bankers pussies. You can pretty much do anything now.
So I just copy the URL and paste it.
Yeah, that should work.
I'll just do that in what, trading room?
Oh wait, somebody on the live stream asked for it. Let me do it. I'm gonna paste it.
Thanks.
I just opened it myself. 0.48. This is pretty good, yeah.
Okay, so longs won 75%, shorts won 95%. Yeah, and those losses that I got were the ones that I bloody moved to break even.
How many trades is this?
41.
Oh, I have to scroll down. Yeah. Okay.
Way too much effort, huh?
Yeah, I was just like looking at the top. I'm like, wait a minute.
So where did you share this link?
Stream Talk.
Did you put it in Stream Talk? Because I just shared it with the people on YouTube.
It's also in Stream Talk chat. You can just see it in there. Click it.
Yeah, right. Yeah, you can just go to the Stream Talk channel.
Damn, dude, that's fucking. All right.
Can you check GBP CAD?
Sure thing. Just give me a moment. I have to gamble my demonstration loss back. is kind of counterproductive because I'm still buying the Nikkei. It's a different account.
Yeah. I was pushing 86% last night, but then I closed a position that was gone the wrong way, and I managed to close it at $90 loss, and then quickly open another trade on another pair to sort of, I guess, hedge that loss. But picked up $100 there, and then that was me for the night, because that last position was overtrade anyway.
I thought you were saying the average RR was 3 on this.
Yeah, that's usually what I run at, but for this is where I cut it off at 1% or 0.5
Cool.
each position. Because otherwise I've got to sit there and manage the trades, and I'm not doing that for an evaluation.
Yeah, fair enough. So you're saying your frequency is about 1 a day during Asia session?
If you want a nice long smooth trade, yeah. Euro Aussie for a move during the Asian session, that's usually good.
I'll start checking that out.
Aussie dollar, British pound Aussie, and Euro Aussie.
Basically anything Aussie.
Yeah. They like to do, here, I'll put it in trading room, like that you'll see the setup that sort of occurs there, and sort of why I'd keep that trade and when I would actually exit.
Close all.
Okay, I got most of the loss back. 0.544% today, good enough. And now Nikkei go the fuck back up. Got my money already. But the Nikkei dipped down pretty hard this morning, and I'm buying it since then, but it hasn't moved at all. It's kind of disappointing because the Nasdaq went straight up after that.
There you go, I've just posted the screen of like Aussie US. So you got the Donchian crossover, and then until that Donchian really does cross back over, you don't exit.
45 million euros worth.
Okay, nice and simple.
Table.
Yep, best entry is just after a divergence and then the Donchian cross, and then you take it.
Euro dollar.
This is a 1 minute chart, right?
Yeah, 1 minute, but you're trading like a 4 hour time frame, 1 hour, doesn't really matter. You just zoom out, because all you need to place your thing is the cross, a divergence usually, but you're just using the TMA band's bottom.
Use the boxes or the histogram?
The what?
He's asking about the divergence on MACD, I think, right?
Or the channels?
Oh, the channels. That's your TMA bands.
Oh, okay.
So yeah, I just use a Donchin 38 midline or basis line. Once that crosses above my TMA bands that are set to a long period, which is 127, and a deviation 4.
Will be seeking approval for as much as 45 billion euros of additional borrowing this year to keep the economy afloat as the pandemic drags on and the country struggles to reach a goal of vaccinations per day of 500,000, according to reports. As PM Draghi's cabinet is set to endorse the plan when it meets today, before sending it to Parliament to approve.
Like on this occasion, there was a MACD divergence, and then you had the cross above with the slope up starting on the channel, and because the TMA bands are at 127, it gives you enough movement. Like, unless you're completely wrong, it ain't going to the bottom of your TMA bands. So if you put your stop loss there, you're good. And yeah, you just manage it. You just keep an eye every time it comes close, and just do like a retracement or a fib, but don't do the fib on the actual the price chart. Do your fib on your RSI. RSI I set to 61.
That's funky. I've never heard of that one before.
Yeah, I use my RSI. RSI trend line break is a great entry, and a RSI divergence, and then you can draw your fib on that, and that will give you an accurate thing, because the price chart might spike down a bit further and you're like, oh no, it just violated the the retracement rules. But if you draw it on your RSI, no, it's just it needed to go down a little bit further for that retracement on the actual RSI. So but a great example, so when you got that little pullback, your RSI will be angling down towards your center 50 line. I'll post this one, but it's just drawing your trend line on your RSI, and that will give you the entry point that you'll be looking for a re-entry if you missed the first one.
Okay, that's cool. I've read about people using like levels on the RSI before. I never really succeeded with myself, but that's cool.
If you're above the 50, then you're in an uptrend. Depending on the setting of your RSI, the higher period, the longer you're looking at. So like if you set it to 200, then if you're above 50, then you're in a longer term uptrend. If you're underneath,
the US administration
then
and the
you're
US
in a
Labor Secretary
downtrend.
Marty Walsh commenting that Amazon and other companies should expect union organizing efforts.
Just don't use the oversold and overbought crap. It's more of a trend direction.
Pushing for the passage of PRO Pact to ease the paths to join unions.
Yeah, no, like I've never really been.
With infrastructure package is ongoing, and it's too early to say if the progress has been made. While adding them not currently open to smaller federal minimum wage increase.
Yeah, I've never really been too huge a fan of those oversold crossovers. Mostly just divergence.
I'm trying to post this thing, but I don't think it's actually going.
It works when you click on it.
Oh, okay, cool. See how you got the you just draw a trend line, and you'll see that it comes down to the 50, and technically that's, I'll show you the actually, yeah, I'll show you the RSI and how I double check on a movement.
So basically, you don't even need to bother waiting for the trend line break on the price chart. Just look at the RSI and that's it.
Okay, so indicators are usually lagging, but if you have a trend line break on the RSI, because that's basically signaling like a momentum as such,
$CAD.
then it turns the RSI into a leading indicator for that break. So you do get the leading aspect when you have a break of a trend line on the RSI, because that will happen before the price actually sort of replicates that.
Okay, cool.
But it does take a little bit of practice.
And a lot of patience, I'm guessing.
Yep.
Just beware that US Secretary of State Blinken is currently speaking in Brussels, speaking on Afghanistan, saying it's now time to bring our forces home.
$CAD.
So that last one is just a zoomed in view of my RSI.
Further on vaccine,
So
news, Dow Jones report
any-
the US Federal Agency panel will be meeting today on the Johnson & Johnson vaccine.
So anytime that it, because you had that retracement and then push through to continue that trend, any little pullback that you get will, if it goes further than that sort of 61.8 area on the RSI where I've drawn that fib, then that's when you would exit.
Johnson & Johnson headline as the Federal Advisory Panel will be meeting today, debating whether and how Johnson & Johnson COVID-19 vaccine should continue to be used in the US, following reports yesterday of rare but severe blood clots among a few recipients.
But pretty much I use the 50-61 as more of an entry point, as long as I'm not following a retracement and a crossover the center.
Cool.
Yeah, I use things really sort of funky, just because I sort of look at all these indicators and I put them all together, and then I mean, I've had Donjin channels put on my RSI, I've had all these different things, and then I sort of just go, what do I actually want to see? What matters to me when I'm trading this sort of way?
To US political news here for Biden's infrastructure plan, as Axios reports that top White House officials will be meeting today with a bipartisan coalition of House lawmakers at the administration tries to enlist moderates to support the president's infrastructure plan. So the meeting is something of an olive branch after Biden's team courted groups of progressives to back the $2.2 trillion package.
How can I increase this Sharpe ratio?
Like I said, 0.48 is pretty good for a day trader.
But when you look at something and it's like 0.48, like that, dude, that's not even one.
Yeah, it should be one, but yeah, it's not gonna be easy to accomplish.
Okay, so the Sharpe ratio is used to characterize how well the return of an asset compensates the investor for the risk taken. The higher the value, the better.
You don't want too much change trade by trade basis. Basically consistency.
Yeah, it basically is a consistency indication. But yeah, as a day trader, you're just gonna have so much more stop losses hit. That's why it's gonna be pretty hard to get it over one.
Wait a minute. Is it to do with stop loss hit?
No, not entirely.
Oh, I was going to say, because like everything hits my stop loss, but it's in profit usually.
No, that has no effect.
DAX.
In this system, there is a 74% chance that a profit will be followed by a profit and a loss by a loss.
If you're
50-50.
the thing about Sharpe ratio, it can also penalize you for upside volatility because it looks at standard deviation returns. So if you have a lot of variance in your winners, like yeah, then it can give you a low Sharpe ratio, like unfairly. So you can look at the Sortino ratio instead.
Yeah, but that's actually a good thing because high account volatility usually leads to bad things, even if it's on the positive end.
Where's my volatility?
It depends, I think, Swing, because like let's just say you have a trend following system. The length of the winners can vary quite a lot. Like you may have like quite a lot of 1 hour trades and then quite a few 3 hour and then 4 hour and then occasionally like a 15-hour trade, which I don't think is a bad thing. It depends. Like if you have a trend following system with a trading stop loss, you just can have a lot of volatility that way.
Yeah, but this is not volatility. That's what I meant.
Yeah.
You have a 15-hour trade that doesn't create volatility.
It'll be volatility in returns, right?
No. Yes, technically, but if there is no time involved, but there is time involved, you're following a trend, and if this gives you a 15-hour return, then so be it. But if you how do I put that? Sure, this one trade will create volatility because you're gonna have a very large take profit at the end of it. But you're not gonna have in the same time frame like a 15% drawdown on stop losses you're gonna take, something like that. That is actually far more worrisome.
Yeah.
Okay.
But for a day trader, that is where basically your job is to get stopped out. It's very hard to achieve a high number, but every risk manager knows that, so they will not look at you badly because you have a Sharpe ratio of 1. That's just they know how things are.
All right, cool. Because that's so confusing. I'm so confused about all this stuff. All I know is that if I average around about 1% a day, and my drawdown is like maybe 0.5 or so, like, actually, I don't even, where is my drawdown?
This is all about exposure. That's why I don't publish this number on the metrics page inside your Envoid account, because of the fact that I personally don't like this number, because what really matters in terms of risk, I mean, what really matters is exposure and not risk per trade.
Yeah, I totally agree with that.
So if you put that's why my second question when we talked about your profile was how many trades you take, because you said you're gonna risk whatever, and then the next question is how many trades do you take on average, because that's gonna give me the exposure. If you risk, like, let's say you just casually say I'm gonna risk 1% a trade, like most of the people do, and then I ask how many trades do you take per day, and they say 5. That means they are gonna have a 5% exposure, and if they not have a 10% return on the same day, that's a bad trader for me.
Yeah, the only time I think the most I can't even find my max exposure.
Because this is very hard to compute. That's why this is not in the system. That's why the system creates this out of the daily and max drawdown, but these numbers are absolutes, and that's why they are not that great, because this number can only get worse for you if I would use that as a basis for the calculation. That's not entirely true because you're supposed to make money over time. So if your drawdown goes up, but your profits go up as well, then the number will not change.
Money lost.
That's why I put on the public pages this risk exposure versus risk versus reward ratio, not the Sharpie ratio. In the end, this is what really matters, because the risk manager only looks at how much money is at risk. And if you have if you make 10 trades and each one has a 1% stop loss, then that means you're risking, you have a 10% exposure. And if you're not returning 10% on the same day, well, sorry, it's just a bad trader.
Okay, so pretty much profit factor, that's fine. 4.79. Yeah, I'm risking around about 0.25, 0.5, depending on how clean the position is and how quickly I believe that I can get my stop loss to slightly in profit, and then I just leave it go and trail it from there.
Well, the problem is if you have a stop at a certain price, then that already means you already have the exposure, but the system doesn't really care about that. But the system actually only looks what you're really drawing down, but technically speaking, the stop loss value should be the one that matters. To you as the trader, I mean. If you make this, if you determine yourself, I am good enough or not. I mean, this is what I do. I always use my stop values because they matter to me as a trader. But for the risk manager doesn't care if you have a 100 pip stop if you close the position at -2.
Yep. Like, I've got into that practice of, because I use usually a lot of like Donchin levels as a double check. So once I've got a retracement, clean retracement to a Donchin level, and then the move up from there, then that's, as soon as I get that, like I would have entered on that retracement, then once it's completed that retracement and gone past the top point, then my stop loss is then in profit, and then it's a risk-free trade. And usually only at that period of time do I look for other trades, because I know that I've got everything left. I don't have to worry. I'll get a minimum of 0.25 out of that trade.
If you move your stop because you have a technical reason to do that, then this is just fine. Then you just move it wherever it's supposed to be. Don't move your stop into break even just because of the sake for break even.
Oh no, I just secure profits.
But you're securing it for there is a technical reason to do it.
Yep.
That's a completely different thing, because what most people do is say, oh, price is up, let's just move the stop into break even, like I don't know, average price +1 or something like that. Then it's a free trade. Bullshit, it's not a free trade. You're just lying to yourself, basically. That's what people usually do, and it's just garbage. I mean, if the next stop level is like at -2, then it's at -2, and if it's at +1, then it's at +1. But the market doesn't care where your average price is. Oh, by the way, the SwingFish intra indicator also shows your average price. This is very helpful when you're scaling. But it also has the disadvantage that you're gonna start making decisions based on that price, and that's usually ends up in bad ideas.
Yeah, I remember I used to have lots of indicators, and I used to talk myself into trades. Now, if it ain't clean, I ain't doing it.
Yeah, then you're good to go. Nothing to worry.
Alright, sweet. As long as my stats are decent, then I'm happy. Although, I'm sort of challenging myself. I really want to get that win rate up to 90%.
What you really have to worry is the exposure you're gonna create. I mean, if you wanna judge yourself, just take all your stop loss values. Just imagine all your stops have been hit. How much loss is that gonna be? And how much is the return you made on the same day? And if the return is greater than all your stop losses being hit, then you're good to go. And your average win is also your expectancy. That is also a very good number to look at.
Expectancy $78 US.
That is pretty good at 0.0 what's 0.14 or something like that. Is that right?
I don't know.
You need to, if you have a positive expectancy and it is about the same size as your risk, then you're good to go. That's what I meant. Which it is.
And how many times are you doing that a day?
That is a very important number. Like I said before, if you do it once a day, then your exposure is gonna be that, and if you do it 10 times a day, it's gonna 10 times the exposure.
And 10 times the profit.
Yeah, that's where things usually get slightly apart. That's what I keep telling those people. Why are you risking so much? I see people on the risk monitor with a 4.99% drawdown, and the only reason they stop trading is because they're gonna get disqualified at another dollar drawdown.
Euro USD, is it gonna drop?
Then I asked them how much return do you actually plan on making on this trade you just have on right now, and then they cannot answer that question, and that's already an indication that they're just trying to compensate.
Yes, I see Euro USD dropping.
I'm out already. I'm not gonna do any more trades. I'm just shorting the DAX on another account, and I'm still long on the Nikkei, which is probably gonna fail.
Just wait for a slight retest here, and then I would say yes.
Thank you.
If I was to randomly chuck a position up at the moment, I'd be saying I'd just pop like a from where it is now, probably a 14. Oh, perfect, 14 pip stop loss, and then I'd go a 20 pip take profit. Then I'd be done.
The euro.
It just depends on how this retest goes.
On what? Sorry.
Euro US dollar.
It actually made a new low. Damn you, bitch.
It is coming up for a retest though. It has to, because it's created a minor divergence. So I'd be looking at yeah.
I
It's
put
just
all
about-
of my investments on sell Euro USD.
Oh god, no, don't say that.
Looks like it's gonna go straight down.
Little touch up.
Technically, it made the reversal already.
Little touch up.
This is something I would hard sell. I'm done for today. There's so much price action not far down. How much did you say? 20 from where? From the current price? That is a pivot. 24 down from the current price.
No, not right now.
Just so we have the same ideas. If you go 24 down from the current price, 25, there is the pivot. And that is actually a pretty good target.
Yeah. Oh, is it? I don't know. I didn't check any pivots or anything like that. I'm looking at a 1 minute.
It's good to have the pivots on, then we can talk about stuff, and then we don't have to explain to each other what levels we mean.
Okay, well, yeah, I should pop those on.
Pivots are good for communication.
But you still will have a little bit of a bounce up.
Yeah, but when it broke the VWAP, there was already a bounce, but it was just 4.5 pips. But I doubt it's gonna go up 9 pips. That's why I will sell it hard now.
Maybe like 2, 3.
In the 1 minute, let me just go to 1 minute real quick. I'm usually on 3 minute.
Yeah, at this point I'd probably be happy with putting a 14 pip stop loss and 20 pip take profit and be done with it.
If that's your plan, if you enter now with a 14 pip stop, then I will scale in at -7, at least double the size. So trade half now and have the other half at -7. In case it actually does make the retest. Because this other half will be so much larger. You say 14. 14 is here. The scale in position will only have a 6 pip stop.
Your Donjin channel hasn't dropped yet. That's just what I'm waiting for.
We're going in with half the size at 14 pips, and then you're going in with the rest of with the other half at 6 pips, but this other half will be double the size. This is why scaling in a loss is always better than scaling in profit.
Heck yeah.
If you scale in, just for the example for everybody to understand, especially on YouTube, what I mean, let's just turn that around. We sell now half the size, and then it goes down 7 pips, and then we scale in profit. The scale in size will have a 24, 25 pip stop loss. So your 50% will be 25% at that point. Scaling in profit will result in 125, no, not even 75% of the initially thought size, while scaling in profit will be almost 200%. 160 something. The same. If you get stopped out, of course, both examples gonna have the same loss in money. Let's do the math real quick. %172%. That is not, because this is not binary. It's not only that you add more than double of the size of the original position, the position you added also travels more distance in profit. That adds to it. That's why these numbers, and that's where the most people are actually getting confused. When you're back at your original entry, you're already massively in profit because the scale in position is A, larger, and B, travels all the distance in profit.
Okay, I should start moving soon. MACD is looking like it's doing a looks like it's going across, but I don't think it's going to cross. I think it's going to do a touch.
1.8 something.
I don't know how far it's going down. I've just got my target would probably be around about 20 pips from that entry. Just did 1.5. I wouldn't. Well, let's have a look. You would probably get maybe 25, but it sort of depends on the price action as you go down. If we get a divergence on one of the pullbacks and stuff, then that's where I'd say I'll take it down one more and then get out. Because obviously divergence, you will always get that one lower move to confirm the divergence, and then you get out.
That makes sense. All right, I'm gonna call it a day. But we're gonna stick around in the trading room and in the voice chat for a little bit longer. Well, for the rest of the day probably. And see you guys tomorrow.